Hey, it's Marco here from Fair Realty. Today I'm talking about the overnight lending rate being increased to 5% by the Bank of Canada yesterday. This is the highest we've seen in 20 years. 8 months ago, I made a video when the Bank of Canada had increased interest rates from 3.25% to 3.75%. And back then, I incorrectly predicted. I thought if we went to 4.25, 4.5% overnight lending rate, that the market would soften in terms of prices. And the complete opposite happened this spring. This spring, despite the upward trend in interest rates, we saw single family home prices in Victoria actually increase 10%. Now they've leveled off for the last 3 months, but earlier in the spring they went up 10%, which is absolutely insane given the direction of interest rates. At 5%, I would have thought would have seen quite a bit of downward pressure on pricing. So where was my prediction wrong? One thing that's been caused by high interest rates is there's less people listing and selling their properties. And I think it's because they're not in a position to move down or to have maybe an attractive 5-year fixed mortgage that has 2, 3, 4 years left on it. So they don't want to sell and then have to refinance at a higher rate. But because there's few new listings, not that many people selling as predicted, it's keeping inventory low. And because inventory is low, it's keeping prices propped up. 2-3 months ago, I also noticed that condo inventory, specifically condo inventory that was appealing to investors such as one-bedroom condos downtown Victoria, was trending up. And I'm like, okay, there's more investors selling. There's not going to be that many investors replacing the investors selling. We're going to see a build of inventory in this market segment, maybe a bit of softness in the prices. And then the last 2 months, a lot of investors came back into the market and bought up these one-bedroom condos, which I find quite interesting at these interest rates. So what's going on? I don't know. In terms of the investor market, I think the one thing that's helping to keep the condo market buoyed up is rental rates are still quite high. And I think a lot of these investors simply have cash, or a big portion of their purchase is cash, where maybe they're not as rate sensitive as I thought they would be. And maybe some people prefer to park money in real estate and collect rent versus putting it elsewhere. Nonetheless, I do think at some point interest rates have to impact the market, but at what point is that? Is it 5.5%? Is it 6%? I would have thought at 5% overnight lending rate, we'd be seeing downward pressure on prices, but we have not. Which brings me to a point which I've been kind of pressing upon people for the 13 years I've been in business is real estate markets are essentially impossible to predict. If you're buying something as an owner-occupier, buy a good quality product when you can afford it, when you're ready, and when it makes sense for you and your family. Because if you had told me 8 months ago when I made this video that we'd be looking at an overnight lending rate at 5% and prices would have gone up 10% from 8 months ago, I would have told you you were crazy. But that's exactly what happened. Maybe there's more money floating out there than I thought there was, because the resiliency in the market to these interest rates, in my opinion, has been unprecedented. What happens going forward? Tough to say. I think if we're going to see downward pressure on prices, we need to see more inventory, and we're just not seeing that much inventory coming to market. I also think the Bank of Canada is probably towards the end of the cycle in terms of increasing interest rates. It seems like inflation in the US is starting to come down. So I don't really see us going to 5.5, 6% overnight lending rate. But you never know. It's been a crazy couple of years, and it's going to be interesting to see what unfolds going forward. That's it for this week. Marco Juras, Fair Realty.